Hey, this is Matt from InvestiQuant. Today is Monday, October 11, 2021. This morning, the markets had a very small down gap, and it took off to the upside from the open. We do have some kind of differing patterns taking place. So we're going to be looking at a pattern that's taking place here in the S&P. The S&P is this top left chart. You can see this morning we opened down just below yesterday's low, a quick test lower, followed by a strong rally higher. We had about 34 points of range straight up through yesterday's high, and we have since rolled over. We're back down near yesterday's low, or yesterday referencing Friday here in this instance. But we're trading down near the lows now, and we have an outside day that has formed here in the S&P. So we're going to go ahead and set that up, see what that's looked like historically. I'm going to grab all four instruments, although this pattern is not yet applicable to all four instruments. We'll have to see how the others play out to see if they will have outside days. They don't all have outside days right now. So I've selected all. We've got, let me go back and grab that entry time. I need to move that out. I've got 3 p.m. entry time here set up as a long. It'll exit at 4:15 p.m. Eastern time. And to describe the action of the outside day, I'm going to use the post-open filters. I'm going to say that the high is greater than the prior high. So I'm going to hit equals here. For intraday high is greater than prior high. And I'm going to say that the low is less than the prior low. So I'm going to hit equals next to less than prior low. And then the other filter that I want to use for this one, which really makes a big difference in this pattern, is going to be where are you trading within the range. So currently we're trading in the bottom half of the range. So I'm going to add that. Equals here, close in bottom half of the range. That means that the price at the time of entry, which I've got set to 3 o'clock, is below the midpoint of the session. All right, so that is included. Let me add that we gapped down this morning. Hit gap down right there, and then lastly put us in a similar market environment above a 10 and 200-day simple moving average. Now I can click View Results. All right, here we go. These are the results based upon entering the market long at 3 p.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. When you gap down and then at 3 o'clock, you have an outside day that has formed and you're trading in the bottom half of the intraday range. This is taking place in a strong bull market. Historically, we've got 27 samples in the S&P, 28 in the NASDAQ, 24 in the Dow, 25 in the Russell. And if we look at the win rates on them, they are pretty neutral. So S&P coming in, 52% of these have closed above that 3 p.m. price. That's pretty neutral there. NASDAQ a little bit stronger, 57. Dow's the weakest of the group, about 42, and then Russell 40 or 52% win rate on that one. If we look at the average moves, the average loss bigger than the average win for the S&P. That is also the case for the NASDAQ and the case for the Russell. The Dow is pretty similar in size. So historically speaking, this pattern's pretty mixed here going into the close. Win rate's pretty neutral. Now, I did say that intraday range in the closing in the bottom half of the intraday range here, this filter that I'm highlighting here, is an important one for this pattern. Had I selected that at 3 o'clock we're trading in the top half of the range, then these stats get much more bullish. So I have no idea where we're going to be at 3 o'clock, but if this pattern sets up and you're trading in the top half of the intraday range, it is more bullish than what we're seeing here. If we're trading in the bottom half of the intraday range, there is not much of an edge, historically speaking. So hopefully you found that helpful. Good luck the rest of the day, and we will see you next time.